Good afternoon, everyone, and welcome to our webinar today. We're excited to have the Versapay team here with us, and we are going to be actually having a snack break on lower payment processing costs by up to 40%. So I hope you all got your snack from Versapay and are munching on that. As we are about to start this, I just want to remind you that we are recording this webinar and it will be posted to our on-demand webinar library for you to review again or share with anyone. And if you do have any questions during our presentation, please feel free to type them into the questions box and we will answer them at the end of our session during our Q&A time. So now we're going to kick off our presentation, and I'm going to go ahead and start our webinar.
Hi, welcome to the exciting webinar about interchange optimization and how you can leverage technology to lower your overall cost of acceptance. My name is Jayme Moss, and I'm EVP of Payments here at Versapay. And I have Morgan Toman on the phone with me. She's a sales rep at Versapay. I want to tell you a little bit about the products and services that we offer in our embedded ERP solutions that will help lower your overall cost of acceptance. I think it's important that we talk about who the players are. So who are all the people that touch your transaction after it leaves your B2B website, your e-commerce website, your customer service, your point of sale? So here you are, the merchant. And the first thing it does, especially in our embedded ERP solutions, is it talks to a gateway. And then that gateway talks to the processor. The processor goes out to the card brands and it gets an authorization out to the issuer. And then all that transaction does is comes back, we fund you, the merchant. So now that we know who all the players are, let's see who gets paid along the way. So here's you as the merchant. The first thing that happens is there's an authorization fee that sits at the gateway. And then the processor, Versapay, takes their transaction fees. And then you have the assessment fees that the card networks take. So your Visa, MasterCard, Amex, and Discover, they have inherent fees in there, kind of like a toll booth is how I like to think of them. And then it goes out to the issuing bank. And those are anybody you can think of that it's an issuer out there in the market. So all the different card brands that come into your establishment, those are all the issuing banks. So the big interesting thing you're going to notice about this slide is really who gets paid along the way and how much of the transaction they take. So as you can see, the gateway takes a pretty small fee, processor a little bit more, the card networks pile it on a little bit there in the end, but the biggest amount of the cost that you pay for each transaction goes to the issuing bank of that transaction in the form of what we call interchange fees. Okay, so there's lots of components of interchange fees. There are some things that you can control, some things you can't control, and some things we're going to help you with. So some of the components when you think about are the card type. It's one of the components of what makes up interchange. So card type is your travel rewards card, your purchasing card, your business cards, your government, corporate, and fleet cards. Those are all different types of cards that are issued in the market. Then you have the way that those transactions were processed, whether it was swiped or keyed. That's another component of what makes up the total cost of interchange. So 1 and 2, you can't really do much about. You can't really do a lot about what type of card the customer presents as a form of payment. You can't really dictate how you're taking the transaction. You can't say, hey, I'd like to key this, I'd like to swipe this. Can you get in your car and come on down here and let me swipe it? I don't think that's going to work in the real world. So the third element is the part that we consider our secret sauce. This is where the interchange optimization really happens. Because there's lots of information that's sent with that transaction. There's address, sales tax, customer code. There's line item detail in the terms of level 2, level 3. So these are all items that we are able to help maximize that overall savings and optimize your interchange rates. I'm going to turn it over to Morgan and talk through what a cost analysis looks like and why we get a copy of that statement so that we can help you manage your overall interchange and optimize that interchange rate. Morgan?
Perfect. So let me share my screen. Alrighty, one second here. All right, awesome. So what I have pulled up here, and this is probably my favorite part of what I do, if I'm being completely honest, is the cost analysis. This is a way for us to get extremely detailed and transparent in what your costs are going to look like on a monthly basis. The way that we achieve this is by requesting a recent merchant statement from your current credit card processor. Reason behind that is your monthly merchant statements break out a ton of detail around your processing activity. Like we just talked about, there are fees from the card brands, Visa, MasterCard, American Express, and Discover. We have the issuing banks and Interchange, and then we would have fees from your processor. In this case, it would be Versapay. So this allows us to show you what your exact costs would look like with all three of those parties involved. So this is a live example that I have pulled up here of an actual cost analysis that I put together. You will see here that it kicks it off with a cost on Versapay, our Versapay costs here. So this is our margin of profit. And then we move down to Interchange. This again is that 80% of what you guys are paying in total per this specific given month of this merchant statement. Off of this interchange, we can reflect that level 2 and level 3 data that we had just spoken about. Those additional line item details that we send through on a transactional basis that help your specific interchange categories qualify at the lowest rates possible. So on my cost analysis here, I can show you line item by line item, the exact categories that are going to qualify at a better rate. And this will read like a book to your current merchant statement. You can look at your current statement and see exactly the rates you are qualifying at and the fees that you are currently paying on interchange versus what your interchange fees would look like with SoluPay and any category that would qualify at a lower rate. Beyond that, we get into, again, our dues and assessments or any other fees that would be on behalf of the Versapay side. So like your authorization fees, your dues and assessments, and then a couple of other small ticky-tack fees, again, all on behalf of the card brands. So when I say this is all in, out the door, down to the penny, I do truly mean that in the sense that you can even see here, we have a small line item for even 21 cents. It is 21 cents, but at the end of the day, it affects your bottom line. So when you look at this pricing proposal that I put together for you guys, you can see that for the month of February of 2021, based on this processing activity, you can see this business's current fees at about $16,500. If they would have processed this specific given month with Versapay at our proposed costs, their fees would be at that $14,800 range. That gives them a monthly savings in this month alone of $1,699. Based on this month, if their processing activity was similar month to month, they can expect to see an annual savings of around $20,000. And that is pretty much the cost analysis in a nutshell. So Jayme, I am going to hand this back over to you.
Awesome, thanks. So as you can see, Versapay is very interested in showing complete transparency. I'm not sure if you've gotten analysis from other processors in the past, but very few times you see such line item explanation of exactly how the transaction was processed. A lot of times we get the question, I'm sure Morgan, you get this when you're doing sales activities, when you ask for a copy of the customer statement. And they're like, why do you need to know what I'm paying? And part of that is so we can understand what types of cards you're accepting, how you're accepting those cards, and the different ways that we can optimize those transactions. So we start with that moment of transparency, okay? And then we're going to provide that detailed cost analysis that compares exactly what you are currently getting with how we could process that transaction for you in an optimized way. And one of the reasons we're able to optimize interchange is because we have direct ERP integrations. So we're getting all of that important line item detail that I described earlier, the invoice numbers, the items that they purchased, the sales tax, the customer code. We're bringing all that information over from the ERP, so we're automatically able to send that data with the transaction on a transaction by transaction basis and minimizing your overall cost of acceptance. So that is one of the full circle ways that we can see the entire transaction, because we have the gateway, we are the processor, and we're sending that information over, and we're able to complete the entire sale, the entire transaction from authorization and settlement. Several things, like even if you authorize the transaction and then you ship that transaction more than 7 days later, we recognize that transaction as sale, and we can use reauthorization management to again optimize your interchange so that you get the best possible rates. And what that means to you is the fact that we can lower your overall cost of acceptance anywhere from 20 to 40%. As you can see, the margin that Versapay makes on a transaction is very small, and the 80% of the transactions go out in that interchange fee. So by us working together with the ERP and providing that interchange optimization, we're able to take a huge benefit. We're able to process a huge benefit for our customers by doing that level 3 optimization, level 2 reauthorization management. Again, we do all of that with no interaction from you, the merchant. We're able to grab all that information from the ERP in the background, behind the scenes, and are able to really reduce your overall cost of acceptance. Another thing that I want to make sure that we point out is that, lowering your overall cost of acceptance is a huge benefit, obviously, but we also really help eliminate fraud. One of our other main focuses is to help reduce manual processes. Because we have that direct connection with the ERP, we take over where the ERP creates an invoice, creates a cash sale. We take over from there and process that transaction in the most efficient way. We update your invoices. We have e-invoice to cash products where you can send an email out to a customer and get payment right away. We have customer portals where you can log in and your customers can log in and see that information. So we really try to take the friction out of processing payments. And we really want to help drive incremental sales. It's important for us that you're successful as an organization. And if you're not taking payments over the phone, you're able to do that in a frictionless way. Or if it's an alternative payment, maybe you want to, we have tools that can help you like Affirm or Bread, where we can help drive incremental sales. So at this time, I'd just like to thank you for joining our presentation. I really appreciate you being here, and we'd love to tell you a lot more about the products and services that we offer here at Versapay. Thank you.
All right, Versapay team, thank you very much for the presentation.
Yes, thank you, Angie. Hi, everybody. Thanks for joining. Sorry, I'm just realizing I have this here. My name is Stacy Dozie. I'm a Partner Alliance Manager here at Versapay, and I have with me Chris Smith, who will be able to answer some questions. So, Angie, do we have any questions that came in?
Yes, we do have a couple. If anyone else has any additional questions, now's the time to get those entered in the questions panel on your webinar control panel, and we can get those addressed. The first one is, do all credit cards qualify for level 2 or 3?
So no, all credit cards do not qualify level 2 or 3. In the credit card world, the only credit cards that really apply for the level 2, level 3 savings are the corporate and business and the commercial credit cards. So the level 2 and 3 processing is used in the B2B and the B2G, or B2B and business to government transactions. So that's really where all the savings are. So if you have a lot of customers that are in the B2B space and using those types of cards, that's really where you're going to find a lot of the savings. But that's a very good question.
Okay, thank you. The next question is, how do I pass along the needed information so they can qualify?
So there's really a few different ways that you can do it. The most popular and the most kind of the way that we see in our world is pulling that information out of your ERP or the system that you're using to process credit cards. The downside with that is that you're not entirely sure if you are taking full advantage of the level 2 and level 3 processing savings, unless you're using a company such as Versapay. We do have that extra layer of service where we recognize what information is needed to apply for those level 2 and level 3 savings, and we pull that information out of your systems if it's available. If not, we recognize what information is needed. That way, or needed that you might not have within your ERP. We pass along generic information for you. That way, you're always qualifying for the lowest level of savings.
All right, great. Thank you. And the last question that came through is, what kind of savings can I expect from having this interchange optimization?
Yeah, and this is always the question that a lot of customers have, and a lot of our partners always have. And to be fully transparent, it really depends. So it depends on the type of transactions that you're having within a certain month, and it really depends on the types of cards that your customers are using within that certain month, and the volumes that are associated with those different cards. So in the credit card world, there's over 1,400 different types of cards, and each one of those has a different rate associated with it. So it really depends on which types of those cards are being used within a certain month. I know within the B2B world, if you are going from a level 1 to a level 3, we could see savings as high or over 1% in some instances on commercial card transactions alone. As mentioned from Morgan previously, that does really add up. So the more transactions that you're taking, the higher savings that you could potentially see within a given month. But it really depends, and it's really hard to say, to kind of gauge. As you did see within our presentation, that Morgan did put together a line-by-line comparison, and that is something that we like to showcase on our end to kind of give you a feel for how much savings you could potentially have just by providing some additional information, such as your latest merchant statement. We're able to create those types of analysis for you. But these are all very good questions, and I think.
All right, thank you. I think those are all the questions that have come through. If you have any additional questions, please feel free to reach out to your account manager here at Inovia Consulting, or you can reach out to the team at Versapay, and they can be contacted at versapay.com.
Thanks, Angie. And also our names are on the screen right here. And so our emails are basically stacy.dozy@versapay.com or chris.smith. So sorry, I don't have a slide that has that on there. But again, the Inovia account managers can help get us connected as well. And I do thank you all for attending, and thanks, Angie, for having us.
Thank you, everybody.
Thank you. And thank everyone for watching, if you're watching on demand, and taking the time out to join us. I do want to let you know that we have some training workshops available for you and your team members to attend. You can visit our training workshop page at inovia.com/workshops for more information and to register for the training workshop that fits your role. And we do have more webinars coming up. We will be taking next week off. We'll be back on July 14th with Mary Malone and Keith Sayer from Inovia Consulting. Mary and Keith will be presenting on 3D customer engagement with ERP, CRM, and marketing. So check out our website for more of our upcoming events, and that's inovia.com/events. And we have a podcast, if you have not heard of it already. It's called the Inovia Conversation. And we just want to encourage you to listen to the selection that our hosts, Steve Woltz and Jeff Progolski, have provided to us. And you can find out about all the different podcast platforms to listen to on our podcast page, and that's inovia.com/podcast. So check out our selection and subscribe so you'll get notified when those new episodes air. All right, well, we thank you again for joining us, and we look forward to seeing you again soon on another Onuvia webinar. Take care, everyone. Have a good holiday.
Thanks, everyone.
Thanks, Versapay team.